Because there are growing concerns about a possible contagion risk from the $15 billion implosion of Sam Bankman-Fried's now former empire. And there are a lot of questions that still remain. Joining us now is Mackenzie Sigalos, who covers all things crypto for CNBC.com. We spoke on the phone this weekend. I know you have reports out. You and Kate and everybody else are working their tails off. We appreciate it. Thank you very much. Everybody's trying to come out and say, we're fine. We're fine. What's the contagion risk here?
So we are seeing this push by crypto exchanges like Binance and Crypto.com to show a partial look at their books and just reassure customers that you can treat an exchange like a bank account. Because the big worry here, Brian, is that people will start withdrawing their funds and then the business model doesn't work if that happens. So today we saw the Binance CEO, CZ, speaking at the G20 summit in Bali, saying that they have no debts, they don't owe anyone any money. He also made the point that, hey, we're starting a fund to shore up other crypto firms. They're saying that they might step up as, you know, being someone who can rescue others in distress.
Isn't that what FTX did?
Well, right. We saw how that worked out.
We're still finding out.
Right. But Binance is the largest crypto exchange on the planet. We also heard from Crypto.com. There are a lot of concerns about that exchange. Now, it's not as big as Binance, but we heard from their CEO on an Ask Me Anything on YouTube this morning. We have a clip from that we can play in a moment, but he's basically making the point that they have a robust balance sheet. They're totally fine, but there are concerns that that might not be the case.
Well, we do have some breaking news headlines right now. I'm going to give them to our audience. You can comment if you'd like, because they are related, and you're going to forgive me. I'm going to have to read them off my computer. BlockFi, which is a company that I think they suspended withdrawals a couple of days ago, on their own website, their blog post, they're saying they have significant exposure to FTX and associated corporate entities. BlockFi does say that they have the necessary liquidity to explore all options. But then they add they have engaged expert outside advisors that are helping to navigate the company's next steps. And, of course, they say the recovery of obligations may be delayed because of FTX. In other words, you hope there is a recovery of obligations if you're a creditor to FTX. But here's BlockFi basically saying we have liquidity, but we're also hiring outside advisors. A lot of firms seem like they were tied up somehow with FTX.
Yeah, and BlockFi very clearly tied up with them. When they first were...
They got bailed out by them, didn't they, in June?
Yeah, they had a credit facility of around $250 million, and FTX reserved the right to just outright acquire them down the line. So FTX was definitely a hero to them a couple of months ago. Very unsurprising that they're now worried about whether they can keep things afloat without them.
Okay, one of the key issues, and maybe what may ultimately turn out, because there have been no charges filed, I want to make that very clear. Mm-hmm. If and when there are charges filed against FTX, Sam Bankman-Fried, his Caroline Ellison, the hedge fund manager, whatever, a lot of it may have to do with the concept that they took customer money from FTX and used it to plug holes in massive losses in the hedge fund Alameda that was being run by his either current and or former girlfriend, the 28-year-old Caroline Ellison. What do we know about the use of customer funds from here to over here? Because that is spectacularly illegal.
Oh, yeah. That doesn't happen on Wall Street. That is a clear violation of securities.
Oh, we're not in Wall Street. We're in the Bahamas, though.
We're in the Bahamas. So what we know is that a lot of headlines passed on this over the weekend, but essentially $10 billion in customer funds were transferred to Alameda. Now, both the Wall Street Journal and Reuters are reporting that. Reuters is also reporting that $1 to $2 billion of that customer money that was transferred to that trading house Alameda is just missing. They just don't know where it is. So that's a huge concern. And then we had reporting this weekend from the investigative team and our Kate Rooney, and they were looking at the fact that billions of dollars was being used on Alameda. So billions of dollars in FTX customer money is being traded on the Alameda, through their trading house. And so that's especially concerning. I mean, you can't take customer funds without the consent. And what's especially bad about it, Brian, is that it's a clear violation of FTX's own guidelines.
Well, and again, I do not want to speculate, and I'm not going to ask you to speculate, but having done this for 25 years, I will speculate a little bit, which is that what we may have here is that the, quote, smartest guys in the room, or the smartest kids in the room in this case, may have just had a really bad hedge fund and just lost a ton of money. And for whatever reason, whether it was a personal relationship between the two or complex business or both, Sam Bankman-Fried decided to potentially fund and bail out the hedge fund that somehow got to become $10 billion.
Right, and I think he thought he could.
There's so many questions here.
I know, but I think he thought he could stave off that margin call.
That's it.
Prices got better because, like we've seen Bitcoin and other cryptocurrencies, their prices move in a cyclical fashion. We're in a crypto winter, and a lot of people were betting on the fact it was going to come back and it would all be fine, and no one would know about what happened in the meantime.
You keep losing at the blackjack table. You have the fallacy that you're going to eventually win, so you keep doubling down because you think I'm going to win. You could lose forever. We'll see ultimately what happened here. And by the way, you don't have to go into it, but a lot of political stuff coming out, right? Because Bankman-Fried was a massive donor to the Democratic Party.
To the midterms?
One of the biggest,
yeah.
But I think behind George Soros. Mm-hmm. So now that element is kind of clouding some of the storylines, is it not?
Yeah, but D.C. is coming out against him. White House condemned FTX. You're seeing other, folks on Capitol Hill say that they want to see an inquiry into what's going on or what happened.
Well, I think a lot of people would like to see Sam Bankman-Fried just come, see where are you? Do you have an explanation? Yeah. No charges have been filed. Wait. What's going on?
Yeah.
And where the hell's the money?
Right.
That's it.
And police in the
I'm going to leave it to you. You got to get that done in the next couple hours. Mackenzie, it's a real pleasure to have you on. Great reporting. Check it out on CNBC.com.